Hey, Bulls and Bears, we have a very good one today. In our focus to try to be more proactive here and how to navigate this economy, we're going to bring you an interview today with Bob Kudla. He's a trader, and I've been following him for a while, and he's got some nice information to give you today. No matter how serious you want to take trading these markets or trying to make money here in this environment, there's going to be some good information in this video. There's also going to be some offers here if you do want to take it to the next level and see what you can do, in this economy right now. So hope you enjoyed this interview. Bob Kudla from Trade Genius, and let's go ahead and get into it. Bob is the founder and president of Trade Genius Academy. Before that, Bob was an executive for two Fortune 500 companies in the financial services industry for 25 years. He focused on business development and mergers and acquisitions. Bob has been trading since 1981. In 2008, Bob started his first trading service with this private group of friends. He became so popular, he decided to take it public and turn it into a business. Enter Trade Genius 2015. Bob's strength is that he's able to see around the corners and position his trades into the right markets and sectors. For the past 5 years, he's been able to track a 65% overall win record in the market. That's pretty amazing.
Oh, thank you. Yeah, it's actually 66% now. We've been on a bit of a roll.
Beautiful, beautiful. So let's try to begin with some recent news. Obviously, with the bank failures, everybody knows about that. Even the average Joe not paying attention knows about that. But also this headline here out of Bloomberg: U.S. bank lending slumps by most on record in the final weeks of March. Now, I haven't seen the first week of April numbers yet, but what does this mean with this big slump in lending for asset prices? Are we going to see some deflation possibly, maybe in autos, homes with this?
Yeah, I mean, look, you can't avoid, going into recession here. We're having a massive credit contraction here, and this is what the Fed wanted. I don't know if it's the way the Fed wanted it, but this is what they got. And, and I think really, Silicon Valley Bank and all these other failures or these banks under stress, this is a long time coming. And I think it just reached the public, when Silicon Valley went bust, is that, I've been moving money out of money market accounts into Treasury T-bills. They're paying you almost 5% for 90-day money. You're an idiot for not taking the free money. And why take risk? The market has been, we're essentially in a bear market. We've been in one, since the end of 2021, albeit we've had some pretty spectacular, bear market rallies. But, now with this credit contraction happening, is that there's no doubt we're going to go into recession. And even if the credit wasn't contracting, you and I, it makes no sense for us to borrow money at these rates because we can't get the return on the assets anymore. And that's the next shoe that's going to drop in the public sphere. We have, I think, $380 billion of debt that's at 1% and 2%. That's going to get repriced in the next 12 to 24 months. And it's going to be an utter disaster for those companies that are publicly traded, because they're going to have to either dilute shares, they're going to have to lay people off, they're going to have to sell the company, or they're going to go out of business.
Wow. So we're just at the beginning, wouldn't you say, of this downturn / recession?
Yeah, our view is that, you can define recession any way you want to, but we're going to be in this mess into the beginning of 2025.
Okay, gotcha. Now, correct me if I'm wrong. What do you think about this? Janet Yellen came out there, Treasury Secretary, not putting a lot of confidence into the small and regional banks, saying that they'll have to decide on it amongst the Fed and some other entities there. Was that the scare that had banks pull back on their lending, especially the regional and smaller banks?
Yeah, she would rather deal with the 5 New York banks, right, to have control. So she's just trying to sell her book, if you will. She wants these regional banks to be in trouble. I think politically, they're going to have a hard time getting rid of a lot of these banks, because a lot of Congress people and a lot of Congress people supporters have their money at these local and regional banks. And states, especially red states, are loath to give New York even more power over the economic engine of the country. So I think there's going to be a bit of a political battle with this. You saw how fast they decided to protect all the banks, because I'm sure Congress got up in their grill really fast and said,
Yeah.
if you don't do this, we'll legislate it. And so yeah, it's going to be the big war. Look, she's, I view her just as a propagandist. I think she's incompetent, but she's the mouthpiece for larger and smarter forces, if you will.
We also have inflationary forces, de-dollarization. Still hearing that there's not many cars on the lots. I drive by car lots all the time, and it seems like some are half empty or even worse. And prices have not really dropped that much for vehicles, for example. Are we going to see inflationary forces at the same time as possibly the banking crisis deflationary?
Yeah, I call it, an inflationary depression. So price, like you say, car prices aren't coming down, but car volume has collapsed because people can't afford the cars. And so in that sense, yeah, we have inflation, but all these items are what I call bad inflation. They're really taxes, right? So if oil prices go up, that's inflationary, but is it? It's really ultimately deflationary because it's a tax against other spending that you're going to do. So the way we look at Trade Genius, and I look at it personally, is that I want to own things as close to production as possible. Like the energy companies, and I want to sell things that are nice to have. I mean, you just have to look no further than what's happening at Costco, Walmart, and Target to see that grocery items are relatively stable. Nice to haves are getting obliterated. And that's what's really going to happen here. Prices are going to go up, but it's going to be the things that you need are going to go up in price, but I view those essentially as taxes, and the things that you want to spend money on you can't afford, and those things will eventually deflate too, but nobody's still going to buy them, and that's the environment that we're in. And the politics creates the scarcity levels too, because they're just doing whatever narrative they're trying to push. They're trying to reduce production of energy in this country. In Europe, they're reducing production of food. I mean, these people are literally insane, but that's what's happening. And so you want to own companies that can still produce, and you want to be in the Anglosphere. So Mexico's starting to nationalize mines, right? They nationalized their lithium mines. They're squawking over silver now. They nationalized their energy sector a long time ago. Do I want to put money into Mexico? I don't think so. But United States, Canada, Australia, they're still relatively intact legal systems, and that's where you're going to make some money. And there's some great trades in those areas as well. So that's our view of it. So I think costs are going up. It's not necessarily inflationary, because inflation really is a monetary thing of money supply and velocity, right?
Yeah.
If you and I are scared, we're not spending money, okay? And if debt continues to go and credit continues to contract, they're not going to be able to outspend it on the federal level. I think the cake is baked in terms of eventually everything will roll into some sort of deflation.
Gotcha. Okay, beautiful. And we're going to segue into Trade Genius and how you can help a lot of my audience, hopefully, take advantage of your experience in the market that we're in right now. But also, one more thing. When we talk about inflation, I know like people like Peter Schiff, for example, he says inflation is all the monetary stimulus, so to speak, or the money printing, as some call it. And we try to look at deflation, inflation, and prices too, or asset prices, or just the cost of living going up or going down. And this is a big storm of a lot of things coming together. But overall, the cost of living going up or down, if you had to put it all in one lump.
Yeah, I think the cost of living, is going to go up. The cost of living well is going to go way up. And I think it's going to take something to break before prices actually will fall. And one thing with Peter Schiff, he's been very right on gold. Gold's at record prices now. Believe it or not, they kind of snuck up on everybody. Is that he doesn't take into account that when this debt starts to get foreclosed on, that's extremely deflationary. And I think that's, we can see higher prices in a deflationary environment. It sounds weird, but it's
Yes.
absolutely true, because what really matters, and I did another interview, I tell people, don't worry about the dollar or de-dollarization, all that stuff. That's really, it's us against other fiat currencies are relevant. It's really, what is your dollar purchasing for you? That's all that matters. And you want to own things that are going to outrun, the dollar's weakness in and of itself, i.e., if it's going to cost me more to, put fuel in my tank, well, I want to own companies that put fuel in my tank. I want to own food companies that are going to put food on my table. I want to own things that are going to outstrip, the inflation that will be here, or the cost of living that will be here. So I don't think inflation in terms of, like, what they talk about. It's kind of irrelevant. If you own your home and you have a fixed rate mortgage, you don't care about rent and owner's equivalent, right?
Right.
But you do care about, are they going to raise my property taxes? Is my insurance going to go up? And then all the other things I'm going to spend money on. So that's kind of how we look at it. We're in an environment now where you want to own things that are real, and you want to ditch things that are financialized.
Very
And
good.
and and I think that's where we're going to be over the next couple of years.
Okay, now looking at investing and trading, I mean, one of the trades that I've done, well, in the past few years, I don't trade a lot anymore. I used to, but was a Exxon purchase back when oil crashed in 2020, and I held on to that, and it's one of my best trades. And I just saw the price, and it was just a buy opportunity. Is your trading platform more of a buy and just wait, or is it more of a swing trade, day trade type of thing?
Yeah, we're short swing traders mostly, even though we have a room where guys day trade, but we're mostly short swing traders. Ironically, you mentioned ExxonMobil. That's our family's largest position. And I was just joking with the guys in the room before I came on with you. So I think we want to buy near 1,000 shares, because ExxonMobil is going to absolutely dominate. And it looks like they may buy they were looking at precision drilling here. Last week they're sniffing around, but they're looking to get big into the shale space. So they're gonna invest more assets in the United States. They're adopting the same philosophy that I talked about. They want to avoid more geopolitical risk, but ExxonMobil is likely to be a $200 stock here in a not too distant future. So I think there's another double in ExxonMobil. Yeah, we've owned it for years. It's the best run company, bar none.
Okay.
The way we trade is that what we've done a slight correction. I started trading in 1991, and in 1981 I was in the Marine Corps, so they didn't let me trade. And so yeah, so I started trading in 1991, and what we built is we have a couple of really effective algorithms that basically look at trend, and it looks at intensity, and it looks at probabilities. And so what we've done is we've created these indicator packages based on those algorithms that put people in the right trade at the right time. And so we're known kind of what's called outside in traders, so that we're looking for trades that are deviating from the trend, from the short-term trend, but the long-term trend is intact. And then we take those trades, just like a sine wave that you see, like a radio wave, is that the price likes to cycle through a median. And so we like to take it when those standard deviations are two points or higher away, and then we look for that snap back in. And then we're testing the Fibonacci's, we're testing the intensity, we're testing the volume, and that's what gives us the signals. Bottom line for your listeners is that we have a system to say buy and sell, and then we also give trades out every day. We teach you how to use the system, and we make it as intuitive as possible. And with the technology that's happening today, we're just able to make the system easier and easier and easier for people to use and to understand, because it's allowing us to push more information out, to our subscribers. So that's how we trade. We trade the stock market, we trade the cryptocurrency market, we trade the crypto miners, which just had a fantastic run. And then we have a room called the VIP room for people who could talk just like you and I are talking, and they could ask questions, and they're in with another group of traders, and those guys tend to trade. They swing trade, but they also tend to day trade too. And then we have training packages for people We get one-on-one trading with one of three of our coaches. And look, we're different than everybody else. You said you've heard me speak before. We do not overhype things. We're not guru based. We're map based. Our view is that you get rich slowly, because if you're really always trying to swing for the fences, you tend to strike out and you're out of the league. So we're singles and doubles, and you just grow on that, and eventually you can't help but make money over time. And that's what we've done. We mathematically put best practices into trading, and and our record speaks for itself. Every trade that we put out, we record. So you can look at our track record and you can see the trades, the good, the bad, and the ugly. And then you can see how over time how you could take what we do and build wealth. And then we're big in seasonals too. So like right now we know from April to July, this is what energy blooms. And so we've been shifting that way anyway. So and look, today oil's back over $82 a barrel. You and I are talking on a Wednesday, and and I think oil's going to probably go to 115. It's breaking out over some resistance that it has. So you want to own those companies. If oil's going to go up 20-25% in the next 3 to 4 months, you want to own the companies that drill for it and own it. And so that's all we do. Sounds easy, a lot of work behind the scenes, but we certainly help demystify it for people. If I can do a quick plug too, if people want to trade with us, you can go to tradelikeagenius.com. And Jeremiah, we put together some specials for your listeners. So 65% off 1 of 7 bundles. You don't have to do any promo code or anything. You just can call us, chat, or email us, and we'll help you through it. The pricing is good till Saturday. But if you do want to not buy a bundle and you want to buy anything individually, just use promo code SPRING, get 35% off anything that's not already pre-discounted in a bundle, and you can take advantage. And what we charge for the service is really nothing compared to what you get out of it.
And I've heard you in other interviews saying that some people made up their costs that they paid for Trade Genius in just a few trades at the beginning.
Yeah, look, to give you perspective, you can get into our trading rooms for $20 or $30 a month. Okay, it's not like or you could buy the biggest package at $2,500 a year. So depending on what you want to get out of it, I encourage people to get in there, kick the tires. If you want training, a lot of people buy our mid packages, but you get 1 or 2 good trades. It's not hard to make $200 or $300 you paid for the year.
Absolutely.
Right? So we purposely did that. I designed the system that follows the customer. So I make sure it's affordable and make sure that we over deliver and under promise. And it's worked out well for us. We're in our 8th year, so we're happy with what we do for people.
Excellent. So we're going to have links down in both the comments and the description of this video. And my viewers, like a lot of people, need to look for ways to maximize their money, to invest, to beat this inflation, or have more money available when there is deflation in some areas. And hopefully they can make some more money and have it set aside, with trading. So I really appreciate you coming on here and giving us that information, and your experience. Like you said, your win percentage, 66% now, speaks for itself.
Oh, well, thanks for having me. It's always fun to talk to somebody on the same side of the world as me. So thanks for having me.
Definitely. Yeah. Anything else that you'd like to tell my audience here before we end this?
No, the only thing I always say, especially if I talk to somebody for the first time, is that don't get all caught up in the world's going to end stuff. There's always opportunities, no matter what the stock market or the economy does. Focus on driving towards those opportunities, and don't worry about the bad things that can happen. Just keep driving forward. If it's trading, go where the money's going. If it's economy, go where the jobs are. And if it's life, just improve yourself all the time, because I think we're going to go through a world. I think people aren't prepared for that. I think the acceleration of change that's coming this way, and not all of it's bad. So Absolutely. That's the only thing I would leave you with.
Okay, because some people have called me a doom and gloomer. I focus too much on the negative, and that's why talking to people like you is excellent. I hope to have you on again. Would that be okay?
Yeah, always. I laugh too, because sometimes in this business, when we communicate with people, if you tell people things are fine, nobody's interested. Everybody's interested in a car wreck, right? So,
Yes.
so we'll get your attention with the doom. We'll educate you so that you can you can be prepared and be ahead of the pack. But yeah, thanks for having me, and I'd be delighted to come back on again.
Okay, you nailed it, Bob. Well, thank you very much. Good to see you. Good to meet you. And we'll have the links down below for our listeners. And have a good one. And we'll see you next time. Okay.
Thank you.
Thank you.